So an ISA catastrophe, what do I mean by that? It feels rather sensationalized, doesn't it? But this is the problem, is that people do not understand ISAs truly, or at least the levels of detail that you need to go into to make sure that your ISA works in a way that is right for you and avoids all the problems that you could have. Let's just go through some of the ISA problems that you need to avoid today. So the first one is a £20,000 limit. There is a danger that you put £20,000 in or you forget how much you've put in during the course of the year. Other people may have also contributed towards it, and there is a danger of what happens to that excess. Then you have incorrect transfers, no longer an ISA. If you incorrect transfer asset classes and types, then it no longer becomes an ISA, it becomes a taxable event for that transfer, and potentially there could be ongoing tax issues as well. 25% penalty on early withdrawals of lifetime ISAs, something that you could really do with avoiding. So using the wrong type of ISA, thinking I can make withdrawals from it, causes you a tax event, therefore you have to pay tax on it. It's not something you intended, therefore disaster ensues. ISA fees eroding returns. Just because it's tax-free doesn't mean it's free everything. So you could well have a situation whereby you have fees to manage your ISA. And the next problem then would be how well is it performing? If you have return on investment, you should be tracking your ISA's performance on a yearly basis at the very least. Most people don't. They just leave it in a tray, the inbox, and then just ignore it. But their investments may well be eroding after fees. Just because it's tax-free doesn't necessarily mean it's the right type of investment for you. Here's some ebooks that I think would be worthy of downloading and reading. There is the first book, which talks about growth, growing your investments, whatever type of investments that you want to get into in a tax structured environment. And then legacy is making sure that you look at inheritance tax planning and succession planning. So feel free to use those QR codes to download them. The links will also be in the description box below. So here's the problems that I want you to mitigate using these simple solutions. First of all, track your contributions. Sounds simple, doesn't it? But again, many people don't and then end up having penalties and fines. So £20,000, make sure you don't go over that. Make sure you check the dates from the 6th of April to the following 5th of April. It is not a calendar-based system. Always use ISA transfer official forms, so make sure it doesn't come not a taxable event, or indeed that those assets that were in an ISA now are no longer considered to be an ISA, which then causes you even more problems. And only use ISAs, lifetime ISAs, for home and retirement planning. So if you're buying a home, you can use it. If you're retiring, good. If you're using an ISA just for a couple of years and then pull money out, maybe a lifetime ISA isn't right for you. Pair ISAs with pensions and company investments. ISAs, again, are limited to £20,000. If you're looking to invest even more, then maybe you need to look at other avenues. If you're thinking, well, I need to really reduce my employment income, then a salary sacrifice pension investment may be better than an ISA. Because let's be fair about it, just because it's tax-free in an ISA, you're still being taxed on the income to generate the money for your ISA investment. But a salary sacrifice pension may well be better because you save on income tax and national insurance. After that has been exceeded, you may need to consider using a limited company to make investments which could have tax-free income. Include ISA in your will. If you are thinking about legacy planning and you have ISAs, make sure you track it, whether it's an asset investment tracking system you have, but at least put it in your will to say who benefits from your will upon your passing. Review the return of investments of all your investments. Make sure that just because it's tax-free doesn't mean it's a great investment. So make sure you look at the performance, look at the risk profiles, and speak to your IFA, your wealth manager, who are qualified to look at your investments and help you along the way. We have connections with wealth advisors. Please feel free to reach out if you need to speak to someone who is going to be professional and looks at the best of your interests. So in the examples, we talked about the £20,000 limit. If you exceed that, what happens? Well, the excess loses the tax-free status. So once you've put in £20,000 into your ISA, anything in excess, let's say you put in £25,000, £5,000 of that investment would not be tax-free when it builds up investments and then causes tax issues, and you'll be paying taxes, maybe not in the right tax structure. Lifetime ISA withdrawal. So again, if you are going to make a lifetime withdrawal, it's got to be ready for your home or for retirement planning. But if you're going to use that type of ISA for anything else, then you need to think about, well, I've made the mistake. How do I rectify that? How do I go into another ISA which is tax-free when I pull the money back out again? A lifetime ISA may not be relevant for you. And there could be a collapse, so make sure that your money is protected. Look at the risks associated with those protections and put things in place. Again, it needs to be part of your risk mitigation plans. An investment can go up and down or even pop if things do go wrong. So make sure that you do your risk assessment and put in mitigation plans. There you go. So a quick tour around ISAs and some of the things you need to think about. My name is Simon Misiewicz. I am a UK investment tax specialist, part of Optimise Accountants. There is our website. Feel free to book 10 minutes to discuss our services of how we can help you build your wealth without the taxation.